the thing about a college degree, it's not what you learn there in your classes that ends up being valuable to you. It's the people you meet. Because in your career, you're going to run into these people your whole life, and they're going to go and disperse into different disciplines and different companies and banking and whatever else it is. And you will draw on them as a resource as they will on you in your career because you know each other. You can't make new old friends. That's not possible to do. So what I found in my own life is, my MBA, for example, I spent 2 years getting, a master's of business degree. I don't remember a single thing in those classes. I have no idea what they taught me there, but the people that I met there are now some of my most important business contacts and bankers and associates all around the world because they've scattered, from Shanghai to Hong Kong to Phnom Penh, Cambodia, to Zurich, Switzerland, and I do business everywhere. And they're my contacts there. And some of them have gone into politics, very powerful allies in the US Senate. It's all about those relationships. And so I would argue that a college degree, whether you're going to burn through 1 year or 2 years or 4 years doing it, has tremendous value. But pick a discipline where you can actually make money. And so you have to understand that this is an investment in yourself. And you should think a little bit about what you want to do and find something you're passionate about and invest in yourself that way. But it won't be the classes that matter. It'll be the relationships 20 years later.
So now moving on to the NFT and what was the thing that changed your perception on the space or on the software, on the technology, and when did you kind of realize the utility of it and what it can bring to the world?
In 2017, I bought my first positions in Bitcoin and Ethereum. However, if you recall, and I'm invested in many financial services companies that are regulated by the regulator in multiple jurisdictions. So I have to report on a quarterly basis, sometimes a monthly basis. I have internal compliance officers and external auditors, and I also have to file with regulators in the geographies where we do transactions and we own exchanges, and obviously when you have that responsibility, and particularly when many of these companies are publicly traded, you simply can't go offside with the regulator. That's not an option. They were very concerned that the tokenization of assets that were trading not under regulated prospectus, particularly in the New York area, that people were trying to bring debt deals for real estate with tokens, and it was chaos. And my own compliance department said, look, we are getting signals from our lawyers that you simply can't get involved here because these are unregulated securities and breaching securities laws. That's 2017. Fast forward a few years, and all of a sudden we start to see regulators around the world, in Switzerland, in Australia, New Zealand, in Canada, in England, not the US yet, starting to open up to the idea that there's productivity available in not just Bitcoin. Bitcoin is one software, but also Ethereum as a transactional platform, and Polygon, and HBAR, and Helium, and Avalanche, and all of these other software projects. And so for example, in Canada, they were the first to allow an ETF, an exchange-traded fund, be traded publicly with the underlying asset being Bitcoin. Now, obviously, when I see that, I'm realizing things are changing. And I'm a believer in, I've watched the value of my Bitcoin from 2017. It was one of my best performing assets, obviously, and Ethereum. And I said, look, we should start to explore a relationship with the regulators and find out what we can do in the different geographies, because they're going to change their policy at different paces. Right now, the most advanced on earth is Canada. They have just licensed the first crypto exchange tied to a dealer broker. So that's a company called BitBuy. I'm very proud to say that I'm an owner of that. We acquired the company through a public company called WonderFi, one of my digital assets that I've invested in. And we're also, we've gone to Switzerland, we've gone to Lithuania, we're in Costa Rica, we're talking to the UAE. All of these areas are licensing new crypto exchanges. I really like the infrastructure of the internet. My whole point is, what changed is the regulator changed. They have become far more accommodative. And obviously, You know, I had a chance this weekend to talk to some of the senators here in the United States about their policy, and they're beginning to form committees to start exploring regulating stablecoin like USDC, regulating Bitcoin, regulating Ethereum. So I want to be part of that dialogue, and I'm very optimistic that I will be. And I think that this is finally the regulators are saying there's too much value in these platforms. Let's look at it. If they could buy Bitcoin, they would put a weighting right now of on between 1 and 3% of Bitcoin. Now, when you have $100 billion under management, 3% is a ton of money. So if you want to see your Bitcoin traded $250,000 or $500,000 a coin or a token, you're going to have to let these institutions into the market. They are the incremental buyers, and they don't trade. They'll buy Bitcoin as an asset and hold it in perpetuity, which makes the whole environment more valuable. And so the reason you should pivot from the opinion, if you have the dogma of saying, I want to stay decentralized, no regulator, you should think about that. If they were to regulate, and the biggest regulator on earth that sets policy for most markets, financial markets, is the SEC in the United States. And that's why they're taking their sweet time and going very slowly. They know what's going to happen. Right now, those exchanges I talked to you about in Canada and the United Arab Emirates only trade two assets, Bitcoin and Ethereum. No staking, no lending, no margin. They're just starting their journey as regulators to allow to see what happens. But as time passes, my investment thesis on Bitcoin and Ethereum and all the other level 1, level 2s that I own is when they get regulated, including USDC, which is the stablecoin of choice I use for my corporation, I'm limited by my own compliance department to only have 5% in it because they consider USDC a highly volatile equity. I don't think of it that way, but that's how it's regulated currently. The point is, when that happens, the value of all your assets will increase geometrically because of the amount of capital that will be willing to invest in them. So that's the balance of that argument you got to think about. I have had a chance to talk to the committees about this. The biggest question for NFTs, and you're right, it's a very fast-growing asset class, is whether it's a security or not. When an NFT in its smart contract has a royalty associated with transfer of ownership, it is distributing capital. And that generally is interpreted as being a security, no different than a bond paying interest or a stock paying a dividend. But we haven't had a ruling on that yet. More concerning right now is what you said earlier, that there's a lot of scamming going on in the NFT space. So it would be much better for all of us, and I'm a huge believer in NFTs, if we could find some way of providing a new level of security so that you as an owner who have made an investment, whether you've done it on a centralized or decentralized wallet, should have some sense that there's security and an auditable position and a path to understand, when something does go awry or it's been stolen, that there is a way to pursue it. And we don't have that right now. So I would say investments in much more secure wallets and better functioning wallets would expand the NFT space geometrically. NFTs will continue to grow in value because the institutions, just like Bitcoin, will be willing to trade them. It's one of the most exciting areas of crypto. You are absolutely right, huge potential. I'm in the camp that you need to be in both. I want to invest in NFTs, and I do. But I also want to invest in all digital infrastructure, which is why I'm so interested in the exchange licenses that are being granted all around the world. I'm very interested in investing in those wherever they pop up because they're not coming to the US anytime soon. They're starting in other jurisdictions like Canada, like the UAE, and other countries. And so you have to be a bit of an explorer to understand that we're the early phase. And greed does drive a lot of motivation. But so does theft, and most people are not willing to admit it. I am. I've had a wallet that has been hacked. I've lost assets, I've lost NFTs, and I've learned my lesson about security, and I have a different protocol now, and it's very hard to steal my assets now, but I've had to learn that. We've got to make it easier. And so this cowboy notion of, the wild, wild west, which was there in the Great Gold Rush, is where we're at in NFTs right now. But over time, there's so much interest in them, whether it be art or authentication technologies or real estate transactions or whatever it is, because it essentially is a licensed wallet with an audit trail, which is very productive. We will continue to see advancement here. It is not going away. In other words, the genie is out of the bottle, and you're just going to have to stomach the volatility, but it has huge upside.
Future for cryptocurrencies, can you envision or predict coming into the future?
This is an excellent question. I mean, this is really the question of the day for all of us involved in cryptocurrencies. You're talking about China banning Bitcoin mining, and there's other countries, including Russia, that are contemplating this as well. And you are right. What is driving this motivation are concerns about ESG. New generation of Bitcoin miner, an ESG compliant, non-carbon credit, institutionally backed. Those are the new miners, and they're going to trade at a premium, and all of the old dirty miners are going to have to consolidate because nobody's interested in giving them capital anymore. There's no way for them to be clean and not be subject to carbon audits. This is going to be controversial. You're one of the first people I've been talking to about this, because this just emerged in the last 3 months. But we are quietly taking our capital out of those dirty miners into the new clean miners. And that's the new generation of Bitcoin miners for the next 20, 30, 40, 50 years.